September has always been one of the most volatile months for markets. But this year, the stakes feel even higher. President Trump's sudden firing of Federal Reserve Governor Lisa Cook has thrown central bank independence into question, sending shockwaves through Wall Street just days before a critical jobs report. Meanwhile, gold and silver are soaring to record levels as investors scramble for safe havens. Retail giants like Walmart and Best Buy are warning that tariffs are squeezing consumers, and global markets from Europe to Asia are bracing for turbulence. This script dives deep into the perfect storm of financial, political, and economic events that could make September 2025 one of the most dramatic months in decades. Fed turmoil and central bank independence. The firing of Fed Governor Lisa Cook is more than just a political headline. It's a direct strike at the independence of the world's most powerful central bank. For over a century, the Federal Reserve has been designed to make monetary policy decisions free from political interference. But Cook's dismissal, just as the Fed prepares for one of its most consequential rate decisions, raises fears that politics will dominate economics. We'll explore historical precedents, from Richard Nixon's pressure on the Fed in the 1970s that fueled inflation to modern debates about how central banks balance independence with accountability. The implications are huge. If markets believe the Fed can't act independently, confidence in the US dollar and treasuries could collapse, triggering global instability. The safe haven surge, gold and silver. Whenever markets grow uncertain, investors flee to gold. This year, gold is surging to record highs not seen in decades, driven by expectations of Fed rate cuts, fears of political instability, and central bank buying. Silver, often considered gold's cheaper cousin, is also spiking, breaking through 14-year highs. But silver's rally isn't just about fear. It's also tied to industrial demand for solar panels and electronics, making it a unique hybrid of safe haven and growth asset. In this section, we'll break down why metals are outperforming, how ETFs are driving demand, and what it means for portfolios. We'll compare this rally to previous booms, from the gold spikes of the 1970s to the silver squeeze of 2011, asking whether today's surge is sustainable or a sign of panic. Global market jitters. It's not just the US facing volatility. In Europe, France is grappling with political instability, shaking investor confidence. Asian markets are caught between slowing Chinese growth and escalating trade disputes. Emerging markets, heavily reliant on dollar-denominated debt, fear rising US borrowing costs could trigger another debt crisis. We'll explore how interconnected today's markets are. A policy move in Washington can ripple through Frankfurt, Beijing, and Sao Paulo within hours. This section will also highlight the vulnerabilities in the global bond market, where spreads are tightening dangerously close to historic lows. Such conditions suggest investors are ignoring risk, a classic warning sign before major corrections. Retailers sound the alarm. On Main Street, the story is just as urgent. Retail giants like Walmart and Best Buy are warning that tariffs are raising prices for consumers, squeezing margins, and threatening holiday sales. Tariffs were originally designed to protect U.S. industries, but the reality is that costs are being passed on to consumers. With inflation still high, the average household is feeling the pinch. We'll break down which sectors are hardest hit: electronics, apparel, groceries, and analyze how consumer spending, which makes up 70% of U.S. GDP, could buckle under the pressure. This section will connect Wall Street to Main Street, showing how global trade policy directly impacts ordinary families. The Fed's crossroads? All of these stories converge at one point: the Federal Reserve's next decision. With inflation still above the 2% target, unemployment steady, and political interference mounting, the Fed faces an impossible choice: cut rates to calm markets and risk reigniting inflation, hold rates steady and risk triggering a recession. Every option has consequences not just for the US, but for the world economy. We'll compare today's Fed dilemma to Paul Volcker's fight against inflation in the 1980s, Alan Greenspan's cautious moves in the 1990s, and Ben Bernanke's high-stakes gamble during the 2008 crisis. The stakes in 2025 may be even higher. A September like no other. This September could be one for the history books. With Fed independence under fire, precious metals at record highs, global markets trembling, and retailers warning of consumer pain, the pieces are in place for either a major correction or a surprising resilience. For investors, the lesson is simple: stay informed, stay diversified, and prepare for volatility. History shows that September often tests markets, but it also creates opportunities for those who can see beyond the panic. If you found this breakdown urgent and valuable, smash the like button. Subscribe for more daily financial deep dives and drop your thoughts in the comments. Do you believe the Fed is losing its independence? Are gold and silver the best hedges right now? And how are tariffs impacting your daily life? Your insights could shape our next discussion, so don't hold back. The financial storm of September 2025 is just getting started, and together we'll track every twist and turn. This is Felix. See you next time.